Hello, welcome to another episode of Decentral Lounge, brought to you by GlobalStake, your institutional, truly decentralized bare metal staking service provider. Today, we're excited to have an incredible guest on the show, Luca Von Wyttenbach, one of the co-founders of Polimec. Polimec enables fundraising in a decentralized, transparent, and regulatory compliant manner, aligning stakeholder incentives during and beyond the fundraise. Luca first began his career in the traditional finance sector, working as an investment advisor for Berenberg, one of the oldest banks in the world, before transitioning to the cryptocurrency industry when joining Bitcoin Suisse in 2019. There, he was a founding member of the Institutional Products and Services Department, where he worked before becoming head of crypto solutions in early 2022. From there, Luca went on to co-found Polimec with Casper Jorgensen, the former chief financial officer of the Web3 Foundation. After 2 years of nonstop building out the Polimec protocol on Polkadot, this novel project recently launched and will allow investors to begin decentralized due diligence and investing very soon. We're excited to welcome Luca to the show today. Thank you for being here, Luca.
Thank you very much for having me, Ryan. Also, Gordon, pleasure to be on.
Well, why don't we start off with just telling us a little bit about your Web3 journey? Everybody kind of gets into this industry in a unique way. And so just curious as to what that looked like for you and how you came to this space.
Absolutely. I think I got into it like most of the people that start from the financial markets industry, I would assume. So it started a little bit on the trading front, was mostly trading options in the early days, late 2016, beginning of 2017. Looking at spreads and opportunity brought me very quickly into the new world where arbitrage of 5, 6, 7% between exchanges seemed to be the norm. And that was actually quite crazy to start with. The only thing you had to do, and that was the big narrative in 2017 on how you assessed cryptocurrencies from a financial perspective. It was, what are the block times? How is the scalability? How quickly I can do a cross-border transaction just to limit the risk to do cross-exchange arbitrage, cross-DEX arbitrage, and the good old Ether Delta platform, where we had the first iteration of an OTC decentralized exchange. So coming from that aspect, it showed the early stages of what crypto actually started building, which really pulls you down the rabbit hole. As of today, I think most crypto people are familiar with what is a perpetual future, which is an extraordinarily complicated financial product. If we compare it in financial markets, that was, at least from my personal opinion, one of the biggest advancements of finance in general, to have an in-kind future vehicle. Now, not losing too much time on a single instrument, it really grasped my interest in two areas. First of all, in financial structuring side, coming from structured products, option trading, possibilities of enabling new payoff schemes for investors. And the most interesting aspect, how do you reach a global community? And this is also what the perps enabled. It was mostly 5 people in the driving seats behind the paper that in the end enabled the perpetual features, but overall, it's the open source power and the global minds working together. And this is what I'm really, really bullish on in the crypto industry overall, that we can work together with people that we can't reach otherwise. But if you grasp their expertise in a very interesting area, you can build products together that can strive and grow much faster than we usually can in local industries or selected stakeholder bases.
Really fascinating, and it kind of aligns with the vision of what you guys are trying to build with Polimec in terms of just that decentralized aspect of getting due diligence done, where investors of all types, there's no information asymmetry, where everybody's on a level playing field, but then they can bring their individual expertise to the table when doing this kind of due diligence and working together. So I can see how the collaborative nature, just based on what you said, is really built into the protocol that you're building out. So can you tell the audience a little bit more about Polimec and like what it's trying to achieve? You kind of alluded to some of it right there, and just curious to how it all is going to work.
Absolutely. I'll try to bridge the gap a little bit of how we started, why we started it, and where we saw the market demand. So when I was back working at Bitcoin Swiss with my team, we were also in charge of facilitating private sales for clients and also larger OTC deal and structurings. Now, if we simplify it extremely, we have the chance to do it from a centralized entity or in a decentralized protocol. To summarize it very, very quickly, the edge in such a service offering of what can be done in a tokenized economy is far superior because you can monetize incentives of the end users. So we strongly believe you should never assume altruism, because altruism is also driven by egoism, because people are doing it because they feel better if they do something for others, which you can optimize in tokenized economies. Now, what that specifically means is if we facilitate a private sale of an entity or a Web3 startup that wants to raise funds, they usually look for three crucial pillars based with multiple foundations we also had talked with over a couple of years. It's the first one is the crypto industry has a very weird relationship to official partnerships. Dependent on the stage, some partnerships are released even though they're not collaborating over years together. Others are releasing partnerships because they have signed MOUs. Others are releasing partnerships because they have a shared business offering. On the other side, for the end user, it's very hard to grasp what that partnership actually entails. Now, if a company or a Web3 startup is doing a private sale over a centralized entity, the community, the investor, the stakeholders are assuming a reputational affiliation with the provider, even though it's very clear just a financial service offering. The larger decentralized protocol is, they don't want to have a reputational association, which is what we can offer with Polimec, because they trust code. They don't trust the people behind it, because we cannot change the rules of the game. And we want to enable them a tech infrastructure layer where they can tailor their sales specifications to their needs. Now, that's a very important aspect, which also drives to the second part of how do you enable global accessibility of various investor types, meaning institutionals, qualified investors, and also retail, compared to also on a geographical level. How can you include as many countries as possible? If we build that up as a decentralized protocol, a couple of years back, everyone thought DeFi is the superpower, everyone can join. Right now, it took us quite a long time. It was longer than 2 years of having finally achieved a major milestone of enabling a global KYC framework together with Deloitte, of enabling a banking-grade KYC that can be reused by the end user. Now, this is a crucial milestone, and I would like just to use a couple of minutes to reiterate why we believe this is such a huge step for DeFi merging with TradFi. It's that I think everyone at this point is aware that regulation needs to come for DeFi to step up to the next level. And there are various paths this can go. We strongly believe that we need the DeFi natives to remain in the game for the technological rapid advancement. So there is a way of having a privacy-preserving regulatory compliance solution. And this was very strongly our focus. So on one side, we need to be in line with the traditional financial market regulations, which means a person that invests in a sale or in a fundraise needs to have a proper KYC. That one, an end user at this point in time, they can go to Deloitte, they can do the KYC. Now, the second part, which is very crucial, is we're using a permissionless protocol. Now, if I participate in a sale, I don't want to share my sensitive data. And this is where the power comes in of a KYC credential, that the project can specify, for example, that they allow all the investor types on the globe and they exclude sanctioned countries, for example. Maybe they have to exclude the US, just for an example. Then if a US investor would try it, they could not get in. Another company wants to do a fundraise where they only enable for US citizens and exclude all the other countries. The beauty behind that is you don't have to share your public information. There's nothing stored publicly on chain, but you only do the eligibility check with your KYC credential that approves your transactions to go through or not. And that's a very critical mechanism that is in line with the DeFi ethos, that you're synonymous. Nobody knows who you are behind your wallet. And at the same time, the ones that are conducting a fundraise have the clearance from the regulator because they can prove with on-chain metrics that every single participant was KYC'd by Deloitte. And this is how we try to mix the two parts, which leverages the next roads in DeFi of getting institutional players in, be it for audits, for tax clearances, and most importantly, for on-chain proof that I can with certainty show that no one participated without a KYC in certain sales. And that's where we see that it enables many more DeFi applications to come. And we don't have to give up the privacy, and we can still remain as synonymous as we are as of today in DeFi.
Just a quick follow-up on that. For those who are listening, for instance, and maybe they've never heard of, Polimec, there's a backstory here a little bit about this being incubated in Kilt. So for those who are listening, for instance, or don't know anything about Kilt protocol, it was sort of this enabling of these Web3 names with a Sporin wallet. And just wondering if you can explain how that works, because the technology is really cool, how your data is stored on one end, but then you can kind of open your wallet and show that this is correct. So if you maybe want to explain a little bit how that technology works, because I think that's really one of the fascinating things that you're allowed to do, and especially with the partnership with Deloitte, to your point, bringing in that big TradFi name into the Web3 space.
Absolutely. I think one of the crucial pillars is, due to the interoperability, we're able to include others' expertise, to say it very simply. Now, what we're using is a KYC credential, is a DID. You can think of a digital identity. It's a digital identifier, but just for simplicity, you have some personal information, the KYC, which is stored in a wallet, which on the Kilt protocol, you have your DID, which on Polimec, we can do checks, or the project can do the checks of their funding specifications. If we go back to the example, let's say only US citizens can be included in a sale, where we can call and verify the DID on the Kilt blockchain to verify the credentials. And the credentials is an included C-type based on the data that Deloitte does with the participant on the KYC. Now, how that partnership works is, as an end user, I can trust a trusted third party, in this example, Deloitte, in a bilateral agreement of sharing my private information, which is not shared with anyone else. This one is then stored on a blockchain where none of the information are publicly visible. There's only the hash that can be seen by others, which I can use on Polimec to interconnect and verify that my data is in accordance to a banking grade standards of the traditional financial system. Now, of course, this is something that the deeper you go into it, the more complicated it becomes. And the very crazy aspect that we would like to highlight is that this actually enables a capital market economy that is much more efficient of what can be done with individual cultural boundaries based on different regulation and jurisdictions. Why? Because a company like Deloitte has incorporations in more or less every jurisdiction. So they can apply, dependent from your jurisdiction, to jurisdictional specific laws. Now, the interesting aspect with that is that the further that product develops, we can tailor these requirements based on needed requirements on a sale. Now, that setup is not only scalable on the entire globe, but it also means that we can enable global investors to join as future stakeholders in Web3 startups in a regulatory compliant manner.
Absolutely incredible. I mean, just from a technological perspective to what you're enabling. And I did not know that about Deloitte having the individual jurisdictions and how that allows them to sort of tweak those KYC needs based on that particular jurisdiction, and then how that aligns with the project. So recently, just for those, again, who are listening, Polimec launched just not that long ago, a few weeks ago from this recording. And, obviously there's a lot of excitement around. The community's been very, very strong in trying to help onboard people, get them to do their KYC credentials through Deloitte with this novel tech. Can you tell us a little bit about are there any projects that are coming on the pipeline that are looking for fundraising, or is that something that you can't disclose yet? Do we have a list of potential projects to look into?
I would love to share names already, but I'm not yet allowed to disclose them. So what I can guarantee you is at this point in time, we have 7 confirmed ones. We're talking to 9, and we're currently also in Hong Kong talking to some earlier stage projects that are in earlier stages. So the main difference of what we put ourselves as a goal 2.5 years ago when we started was very clearly that the days are over from 2017, 18, 19, where you launch a network and you offer your end users staking for a year. We don't see any value in that. So to put it very, very simply, our roadmap is very, very tough and tightly planned in delivering the real protocol utilities. Now, one of my favorite topics is tokenomics, because it's always a misconception talking about tokenomics, I think, because this is an incredibly deep topic. And most importantly, it's dynamic. It's not a static one, because you have a growth phase, you have a value accrual phase, you have a phase for certain products, and it needs to be split in various areas. Now, what that means in our case is, I can tell you that within the next 3 months, we will certainly announce to start the first on-chain fundraise. So that will be the first decentralized fundraise that is in regulatory compliance that has ever happened. So we're also really excited towards that. Looking on the functionalities of where we are as of today, for the ones that haven't followed every step, is that we started block production in December. We conducted the TGE very shortly in the new year at the beginning of January. By now we enabled staking. We're live with 9 different collators at this point. We have various collator requests as well to scale it up. As of today, we'll also have our GitHub repo private, so the technical part and sharing the open source code base will also be delivered to the community. And as a next step, the governance will be included, the governance palette on the chain, which will then enable the first governance vote that will be used to remove the pseudo keys and enable the transferability thereafter. So one step after the other is so far rolling as planned, which will also enable the first fundraise to start roughly a month the latest after we're live with transferability.
I'm curious, a lot of the market is geared towards EVM chains right now, roll-ups, etc. I saw on the roadmap, you guys are looking to support EVM chains, stablecoins, etc. Can you kind of explain that part of the roadmap here in the near future?
Absolutely. So on our side, we're basically looking at 2 expansion areas. One is broader market access, which is the first pillar that we will focus deeply on, which is trivially spoken is USDC, USDT hosted on an ERC20 wallet to be able to be bridged/teleported onto the Polimec chain to enable everyone or all the MetaMask users to participate in a project that is being raised on Polimec. Because in the end, we're simply the settlement platform that specifies the financial incentives on how the rounds are occurring, which the projects are tailoring. The second part of the EVM-based chain inclusion is then the interesting one, where we're waiting also for the development of the Ethereum bridge, how that develops, of having I'll just make the easy example, having an ERC20 project raising funds that we can permissionlessly secure all the transaction of the participants are included in the Genesis block of the blockchain that will then be launched on an EVM-based chain. So these are 2 parts of the expansion that we're severely looking at. EVM-based chains, because we have most demand on that side. And actually, quite interestingly, the demand is not coming out of nowhere. It comes from push from organizations, larger stakeholders that require an entity such as Deloitte to do the KYC. Because the discussions are large in the market about credentials, about KYC. But for an institutional investor, for an entity, it's a different game if you can prove to the regulator that a company like Deloitte has done the underlying KYC, or if it's someone that can be a little no-name from a country that is not meant in a judgy way, but doesn't have a standing in front of the regulators like one of the largest consulting companies globally. And then the second part I wanted to touch, sorry, Jordan, is the first one is market expansion across blockchain. And then the second one, of course, is exploring new markets, which means that as we have a regulatory compliant KYC, we can actually tap into more traditional financial-based markets. So there I cannot share yet too many things, but as we are bound to a banking grade KYC, we can, of course, open up the market in DeFi also for vehicles that have not been possible yet, given the regulation, or required a KYC every single time. All these use cases we can actually enable with the reusable KYC. And we're looking for cases that might initially be eligible for qualified investors and institutionals at the very beginning. And dependent on the jurisdiction, we're looking to roll that out for as many users as possible. And these are the two main focus areas for this year, for 2024, where Polimec is putting the biggest focus on in terms of market expansion.
Nice. So then to break off, or I guess expand upon the KYC aspect, I'm curious, who is the party here that's focusing on ensuring all the wallets and the parties that are coming to the table are staying OFAC compliant? Is that Polimec, or is that Deloitte that's making sure?
I would dare to say both, but this is mainly the job on our side as well, to give as well the guidance in which direction it goes. Now, what Deloitte does is really the KYC of the end person, right? So they're not in charge of the transactions that are happening on chain, just to separate that very precisely. What is coming with, I think what you want to tap into is that, hey, if we offer financial market transactions on a decentralized financial protocol, where are the AML guidance? Where are the AML rules that are being considered? And if that was the hint that you tried to go in that direction, then also we have people in the team that are in the CMTA committee in Switzerland that are very close to the tokenization, or working on the tokenization framework and the AML guidance in Switzerland, that are really working, or we are working to implement an AML framework in the best possible way to enable such a use case to be in adherence to all the regulatory and compliance relevant topics. And this is something that is not possible to be done from the beginning in a global perspective, but rather in a waterfall strategy that you start in a segregated market, including all these guidelines, and then you see, can you roll it out to European Union first? Do you have maybe the UK market first? Which jurisdictions can you leverage the fastest? And that will probably be a softer approach in the rollout, but also there with the AML framework and with the KYC element combined, there is a way that we can tap into that market and enable these transactions.
That's great to hear. Yeah, 100%. That's the path I was going down there.
Yeah.
Well, Luca, it seems like much of our conversation is very future oriented, right? I mean, clearly this has been a lot of thought that has been put into this, just building out Polimec and where it's all going. So where do just thinking about the trends that we're seeing starting to shape up with institutional adoption, regulatory clarity, how do you think Polimec is going to benefit from this, both in the medium and long term, I guess?
Well, I would love to talk a little bit about the status quo. So at this point in time, we're of course looking at delivering something every week, really focused on weekly deliverables, daily deliverables, while sticking to a roadmap that is, of course, a couple of years out. So we have to prepare topics, because everything that touches regulatory topics is not possible to be done within smaller than 12 months. Now, looking at the status quo, especially the Bitcoin ETF, was a huge upwind. Now, what I mean by upwind for the crypto market, the sentiment that we see, especially from larger and institutional investors, is the very simple fact that an iShares Bitcoin ETF, the discussion is gone that someone that is working in the financial industry is telling you that crypto is not here to stay. The only thing they can tell you right now is, okay, Bitcoin is here to stay, but the rest isn't. But they don't have any other chance, because the moment they see the iShares ETF, and this is what a lot of people are underestimating at this point in time, the perception has changed massively. Now it takes time. Institutions are slow, but the perception is this is an asset class now. Now everyone is aware. It's just a matter of time until the next vehicle comes out. This opens up a much broader market, which means that people are more comfortable and more confident in the long-term growth and the long-term value perception of the market. So what they want to look at is now to understand the fundamentals. What is being built? Where is the biggest upside? How can I structure sector analysis? Now they try to apply everything which we've seen from just a couple of institutionals in the past, but now we have many more looking at it. What that means for us is for the first couple of fundraisers, looking at Polimec is how we've built a fundraise is different to Launchpads. This is a little bit the part where I want to go to. I want to drop the Launchpad word because everyone has the easiest association to that one, and it's fully understandable. But we see a couple of things why I personally don't believe Launchpads will ever work in the long run, is that they have a one-off offering for someone that is raising funds. So I have no interest in you doing very well 12 months from now. So I'm your partner of getting investors in, but I don't care if they dump on the first day. I don't care if they resell later on. I don't care who they are. My job is done if the money is raised and I need a commission for it. And I have a lot of human personnel in the background that wants their salaries paid as well. So understandably, we need to liquidate what we got as a commission to pay the salaries and make the profit as a company. There's nothing wrong with that model. That's a very good financial service offering that a couple of Launchpads are doing. Others have different incentives, but in tokenized economies, you can have the same incentive alignment because otherwise you lose the best quality products over time because you lose the highest quality investors. The moment the large investors understand that, they're invested one round before that Launchpad, right? They're not joining on the Launchpad. They know the game. So how you can attract the best investors and also the best projects is you have to deliver them added value, very simply put. On our side, for the projects, it's clearly the cost reduction that they save, the regulatory clarity they receive, and the time they can save for building on the development front, because every project needs to build for a couple of months how they launch the token, how do they send something to the early investors, how can you claim your mainnet token at a later stage, writing these articles, safeguarding, doing Excel sheets, in the worst case, having paper formats of SAFT agreements, typing it all in. And we're pitching Web3 as the newest technology. That can all be handled by code. And it's an easy infrastructure piece we're offering for them, where we can create a token for them as a placeholder token. And whenever the mainnet token comes out, it converts in the end user's wallets directly. So that's an infrastructure piece as well. On the investor side, I think a crucial pillar is that we don't decide which project raises funds on Polimec. And that's also something that I don't think a pay-to-win model is long-term sustainable, because it attracts the wrong projects, the ones with the highest cash budget, the one that wants to be in the fastest moment, not always the same incentive alignment with the highest quality ones. So we take a more free market approach here, where investors, how it always is, can choose, am I interested at that valuation for that target amount the project is raising if I look through their documents? If I am, I can state my pre-initial interest. What I mean by that is they have an evaluation, what we call it. In the evaluation, if there's enough demand, concretely 10% of the amount the project is raising for, then the project automatically proceeds that the funding round starts at a given time on chain. So by that, we have a fully on-chain mechanism that is driven by investor interest based on the offering the project does. Now, on a protocol, we can incentivize them. So a part of the fee that the project pays, and they only pay the commission if they raised successfully, goes to these evaluators. Now, where that concept comes from is very simple. These guys have done the research and the due diligence. They stated pre-initial interest. So they exposed and used their time. They gave very important information to the market that a certain wallet is interested in investing that project. So what they get for that is basically an investment discount if they invest thereafter, because they get more tokens for their ticket. The second part that we do is that project fees is used to provide them secondary market liquidity. Now, what that more specifically means is the transitioning from the private market to the secondary market, where we want to provide liquidity on a decentralized exchange and can hence offer over liquidity pools initial liquidity in a decentralized way. What that means is that we have the three main stakeholders, the investors on Polimec, the projects raising funds on Polimec, and the Polimec protocol, where all three parties are aligned for the projects to do very well beyond the launch of the project. Dependent of the stage, there might be a gap from a fundraise to the mainnet launch. Depending on the stage, that might be very soon. But all parties are aligned on the same outcome, which is an important aspect of value add that can be provided and the incentive to do so from all parties. And maybe to add one thing on the written evaluations, as you touched it earlier, Ryan, it's one of my favorite concepts. On this one, I think it's such a basic concept that when people invest, or when you saw a super interesting crypto project where you would love to know more and you go through the document and let's say it's a 30-page white paper and you don't understand 5 pages at all, but the other 25 seem super good for you, but these 5, no clue at all. So what do you usually do? If you think it's really interesting, you send these 5 pages to a friend whom you trust and you assume that's his field of expertise. I want to know what he thinks of these 5 pages. And if he thinks it's good, I want to know more about it. Then I think I'm very inclined. And this is exactly what we do with written evaluations, because all the people we know in crypto tend to ask people in crypto for secondary opinions of different fields. Most people that we've asked, especially in the field of researchers and angel investors, always give us the same answer when we ask them, have you ever sent your notes to the project you thought is interesting, or to an early stage startup you invested in? 90% of them says no. Why? And I was like, well, you thought these are the most important points that are the risks of the project, and these are the most important points that you see as positive for the project. Would help them if you send it to them. Maybe they take it seriously, maybe they don't care, but would be an added value. And everyone is like, yeah, but I can't share it with them. That would be weird. Now, with the written evaluations, people are much more inclined to share these things, also with a proper ranking system to get the credibility of certain evaluators that can share and get an expert opinion on certain topics. That helps not only the participants to ask the right questions to get it from other potential investors' feedback on, but also for the project to see what are the pain points potential future users see. Where do they see your biggest upsides? And this is an open communication and, of course, an important ring fencing and proof of work mechanism behind it, that you have to deliver a certain quality of what you deliver in the writing, so that the quality content should be incentivized also over time with the ranking system we're going to implement. But I think that one will be a very interesting part for the protocol going forward as well.
I'm really glad that we got to do the deep dive into the decentralized due diligence aspect, because I didn't really ask a question about before. So I love the explanation, how it all works, and especially the ranking system, which I didn't know, because I was thinking, how would you be able to verify some of this pseudonymously? But to your point, you guys have clearly already thought about that. So thank you so much, Luca, for taking the time to give us this really wonderful overview of Polimec and what you guys are building. How would teams who are maybe interested in using the platform to do their fundraising, or anybody else who's interested in getting in contact with you, what's the best place for them to reach out?
So at this point in time, feel free to reach out directly, be it over our public email address, info@polimec.org. Otherwise, feel free to write to me as a DM on Twitter. Pardon me, sometimes I take a couple of more days, but usually I try to answer very, very quickly. And from there on, we'll usually reply as fast as we can. And once the platform is up and running, also more information will be provided in a simple, digestible way of which steps need to be taken. But of course, very happy to cover all demands and questions. So feel free to reach out directly at any time.
Well, thanks again, Luca, on behalf of Jordan and myself and everybody who's listening or watching the podcast today. Really enjoyed the conversation. Looking forward to seeing Polimec continue to grow in its offering and try out the first fundraising mechanisms as they come to the fore.
Thank you very much, Ryan. Thank you very much, Jordan. It was a big pleasure. Thanks for having me.
Thank you.